this week we're going to jump right in. I mean, I've never had this many questions through the email in my career. I mean, some of them real simple, real short answers. Some of them take longer answers, but I felt they were all important, and I put them down, and we're going to touch on them as we go through on things that are affecting us right now. First, I received from a pastor some biblical verses that reminded us that gold is God's money. We look in the second chapter of Genesis, and we see that gold is spread through the land of Havilah. And right in the very beginning, somewhere around 4,000 plus years ago, this was the first thing used for commerce was gold. And then we move forward centuries, and we see that in 1 Chronicles 29, that the temple repairs were paid in gold derricks, which was money, and the 10,000 talents of silver. So gold and silver were money at that time. And then we moved to Ezra 2:69. There's 60,000 drachmas, gold drachmas, used in the rebuilding of the temple, and 5,000 minas of silver. Once again, what is currency? Gold and silver. That was the way it was intended. That's the way it started. And that's the way it remained until 1970, 72. So nearly 4,000 years, gold was money. Paper was receipt for money, but not money. Only the gold was the real money. And it leads to my favorite verse in 1976 about Ecclesiastes 11:2, to divide your wealth 7 or 8 ways, because no man knows what disaster could come upon the earth. So if you're diversified in your investment portfolio and you have it spread out through several different categories, as we'll see in a second, that's the prudent, wise thing to do. And certainly when we look at Proverbs 24:6, there is victory, there is guidance in using more than one advisor. You talk to us about hard assets. We answer your questions. We try to get in your portfolio at a percentage that you feel comfortable. That's what we do. That's what we've done for 47 years. And it's just important we look back sometime. And the last thing I want to say about that before we change is our Lord and Savior was sacrificed for shekels and 30 pieces of silver, because this army sergeant got 1 shekel every 2 days. So basically what Christ was betrayed for was 2 months. For 2 months' salary, 30 shekels, 30 pieces of silver. So let's jump right into the questions from here. First of all, I got a thing from a client saying that what I said in January when I gave Jeffrey Gauntlet, the bond king of the world, gave his favorite investments for the first quarter. I think it's amazing. He said gold and silver would be the top 2. A man that's in bonds, a man that's in stocks, and doesn't really care about gold and silver, but he realizes there's no way to stop it. Thanks to what happened is we've seen that gold and silver, as an average, have gone up 10% for the first quarter. Stock market went down 9.5%. So we had a 19% difference. For every $100,000 you had in gold in your portfolio and silver, it went up 19.5% better. We look at what the bonds went down and everything went down, and everything went down the stock market, and what went up in gold and silver. So yes, and now what's he predicting? And the current thing, he says gold. He's still saying gold is the place to be. And certainly we know that. We know the inflation's running away, and we'll get that in a minute. But there's things right now you want to watch the interest rates. Yes, as I record this, in the next 2 days, we're probably going to have another interest rate hike. It'll be the second one in a little over a month. And we think there'll be 3 or 4 more unless the economy gets choked off. And the rising interest rates, transport and mortgage rates going up, they hurt the real estate market. So we've got to watch that very closely, because certainly if we don't watch interest rates, we're in trouble. We continue to see bonds liquidating at a record rate. Why do you want to hold a bond when interest rates go up, bonds go down? So we know you don't want to be in bonds. So get on the sidelines. Bonds have been in the bull market for over a decade, but is there time to cycle out as we have a easy money policy like we've never had before? We're seeing student loans talked about being forgiven, billions and billions and billions of dollars. The Democrats want to just cancel the bonds, the debt that they have on student loans. So we're going to watch interest rates. We're going to watch interest rates closely. I mentioned on the show several times over the years. Please go to usdebtclock.org. usdebtclock.org. Spend 30 minutes. It'll be the best 30 minutes you ever spent in the economic world because it'll help you see what's going on and how bad the deficit is it growing. We've gone over 30 trillion. We now, at only a 2% average, are paying over $620 billion in interest on the debt. Back in 1980, that was the size of the whole budget was only $500 billion. Now it's $600 billion just for interest. So we move on up, digital currency. Everybody in the world is talking about digital currency. We've seen the Chinese already start. We've seen in the last month, we've seen Biden and Pelosi both say we're working and we'll have a digital currency soon. And then we see Janet Yellen, the head of the Federal Reserve, this past week say, no, she wasn't talking about that for another 2 or 3 years. Isn't it interesting that the Federal Reserve, a private company, is talking about how to control the digital currency of the world? I mean, this could not be any more blunt as to who owns the Federal Reserve, and it's certainly not you and me. So we look at that. We look at the minutes from going back a year. The Federal Reserve in their March 2021 meeting said there would be no interest rates hike till 2023. On March 16th, 2022, we got our first 0.25% hike. We'll get another 0.25% hike this week, the week of the 17th of April, and that'll be 2. And we'll start to see things slowing down. The economy will, mortgage rates going up, real estate slowing down, and then we're going to be pushed into it because the interest rates, if they don't go up quicker, we're going to keep having this inflation that is up to over 8.65% and growing and growing and growing. We're seeing meat up 26%, seeing gasoline up 18, 19%, and it's just getting worse. And middle America can't handle this. I mean, in no time, flat, they won't have money to spend. They can't spend money they don't have. And their purchasing power is going down fast, and it's nowhere near where it's going to go down. So we look at this and see that we're going to have double-digit inflation as early as next month, or at least the next 2 months. So the inflation rate will kill the spending of the public. They'll be buying necessities only. They will not have extra money to buy, go entertainment, buy tickets to events, and that is slowing down already. Just look at what we've seen up in the prices of tickets in New York coming down because they can't fill up Broadway. We had friends of ours just went up and went to shows, said they were like half and 3/4 full for 2 of the hottest shows in New York. Goldman Sachs just came out last week predicting that we have a 35% chance of a recession this year and 50% next year. While we don't agree with everything Goldman Sachs does, we certainly watch and follow what they're saying because certainly they have billions of dollars at play, as does J.P. Morgan, that is also turned very bullish on gold and silver. So we watch that. Silver has a huge shortage right now in the physical market. We see premiums at an all-time high. What premium being defined as what I pay from somebody I buy it from a major wholesaler or refinery like the Royal Mint, the U.S. Mint, the Rand Mint in South Africa where we have to buy. So yes, it's who wants to pay an extra $1.50 or $2 premium over what it's been, but they don't want to sell it because they know very shortly it's going to be much higher. And therefore, I still urge you to buy it, and we still listed by several money managers. We are the cheapest in the country. They've run test after test, and even with the higher premiums, it's not any going to us. Our markup is still the same. So silver, yes, I would keep. Demand for solar panels are going to continue to escalate. Certainly, if we do have a recession, silver got hurt in 2007, 8, and 9. The stock market got killed, and they got hurt while gold went up. Gold is still your ultimate money and will be a part of the future when everything is reset. And that reset is beginning to take place. In fact, there's some good articles on King World News this week you ought to read. One of them's outstanding. So go to King World News and read that. Still real bullish on platinum. It's had a great, it's gone from 750 now back over 1,000. We gave you a buy signal in the 650s, again the 750s, and again over, it's just getting back to where the third one was. So I still say you need to be in that. Platinum is now 48 times more rare than gold, and yet half the price. So we feel real good about having that in the mix with your gold and silver and platinum in your precious metals part of your portfolio. What's platinum needed for? The person asks. Electrical contact points, electrodes, lab equipment, dental equipment, and jewelry. That's right out of the Platinum Guild as the main uses of platinum. So you can see that. Remember, if you buy from us and don't want to take delivery, we ship it free. But if you want it shipped to the warehouse, we'll ship it there free. And we have the lowest storage fees in the world. Not in the United States, but in the world, we have the lowest storage fees that we can talk to you about by calling us at 800-247-2812. That's 800-247-2812 on those low rates. So the last comment is about the diamonds, and certainly y'all that in early are seeing incredible run-ups. They have slowed down a little bit, but if you haven't talked to me about the XXX diamonds that are liquid like currency and spreading throughout the world, I can't think of anything with less downside risk than a XXX rated diamond, double certified, great insured forever on that. So if you haven't talked, call the same number, 800-247-2812, and tell Jade or Dan that you'd like to talk to me, and I'll call you at a designated time. But I'm very, very excited about it, about now and the future. But inflation's not going away. Bonds, if you're not out of them, you need to get out of them. Stocks, you probably need to get out. All these firms I mentioned are predicting a bigger drop than the 11% the stock market's already gone down this year. Could be another 10 to 20%. And certainly we know that we're going to continue to have inflation. We're going to continue to see people move into gold at a rate. Last comment about Basel III, I keep getting questions about that. So I looked it up and got you a little better definition of Basel III, where banks can buy gold and count it at full value. The definition is it's 27 member countries. They have 19 jurisdictions. They're considered one block in the Basel III Accord. It's global. It's a regulatory framework. It's got bank capital adequacy, stress testing of major banks around the world continually to be sure we don't get in a world banking crisis. So what these banks are doing are moving money into gold because they can count it at full value where there's nothing else except bonds from G7 countries, the biggest countries' bonds. So you can see the demand for gold. We've already seen gold go up about 12, 13% since June when this was started. And then in January, we saw England jump in as a late entry to agree to Basel III. So anyway, I've covered a lot of stuff today. It's always great to be on there. I appreciate the emails about keeping up with these quick things and keeping you informed. So with this bi-monthly precious metals update, this is Tom Cloud checking out.